Welcome back to Author's Note. Since Mario Draghi promised to do whatever it takes to support the eurozone late last year, money has begun flooding back into the continent, particularly from the US. Here to tell us what that all means for the IPO market this year is Alasdair Warren, Head of European Equity Capital Markets at Goldman Sachs.
Hi.
Thank you for being here.
Pleasure.
If you look at this first slide, you can see the private inflows into the eurozone periphery. And there was a big fall and then a sharp rise recently, suggesting returning confidence. Have you seen that in recent deals of yours?
Yeah, well, in fact, the direct Line IPO was a very good example of this. This was executed in October last year, $1.4 billion, the biggest deal in the UK for some time. And the extraordinary feature of that deal was just the overwhelming weight of US institutional money that subscribed for the transaction. In fact, to the extent that the long-only interest in that deal from the US represented more than 50% of the overall demand, and the UK, by comparison, was about half of that.
And do you expect that trend to continue? What does that mean for the IPO market this year?
Well, what we've seen in every transaction that we've executed since really the summer of last year, whether it be an IPO or a follow-on offering or indeed an equity-linked offering, we've seen this trend of overwhelming demand coming from the US. And I think that the combined effects of the switch from bonds to equity, the sort of mutual fund inflows that we're now starting to see, particularly into global funds, many of which are based in North America, makes us feel pretty confident that this trend has legs, not only over the current quarter, but frankly for the rest of 13 as well.
Well, that's interesting. There's a lot of talk about the great rotation, back from bonds into equities. Do you see that as a big theme for this year or just over the next 5 years, or do you think they'll make a big impact in the next 12 months?
Look, given the huge weight of money that's gone into money market funds and bond funds over the last several years as we've gone through the crisis, clearly once that starts to shift, it's not something that gets rebalanced within a quarter or indeed even within several quarters. So I believe this will be a trend that will be with us for several years.
If we look at the next slide, we can see that the IPO market has been extremely volatile over the last 10 years, particularly since the crisis.
Yep.
What makes us think that this time is different? Couldn't the money just up and leave like it has in the last 2 summers?
So I think one of the major changes is that IPOs don't need a raging bull market, but what they do need is a degree of stability. And if you look at what's happened, particularly during the post-summer period from the middle of 12 to date, is that volatility has dramatically reduced in the market. At the same time, there's a broadly based perception that most of the tail risks as they relate to Europe have been removed, i.e. most of the uncertainty. And so whilst of course it's always the unexpected that tends to knock markets off course, frankly it feels that a combination of these inflows, particularly coming into global funds and particularly coming from the US, the need to reweight into equities and this reduction in volatility and perceived reduction in uncertainty is all bodes well actually for a fairly sustained IPO market for some period of time.
So the market looks quite promising, but from the issuer side, with low growth, is it worth it to IPO in this environment?
Well, you say low growth, and that is indeed true for the eurozone, but actually on a global basis, we're projecting GDP global growth rates, in the mid 3% this year. So for those companies that are exposed to the emerging markets, or indeed to the US, and not so largely exposed to Europe, actually the underlying growth rates can be quite strong, in addition to which there are obviously a number of businesses that are exposed to secular growth rates as opposed to cyclical economic growth, and those are very favourable IPO candidates.
Wow, that's great. Thank you very much. So with equity markets rallying, confidence and money returning to Europe, and the pipeline growing, there are hopes that 2013 will be, if not a glorious year, a very far cry away from the dire market we saw in 2012.